Okay, traders, I want to get us ready for this core PCE print because it does have a potential to give a potential intraday trade on gold that's definitely worth looking at. Now, this is not part of the seasonal service, it's just an extra value service that shows you how you might go about trading risk events. It's another aspect of my trading and I want to share it with you. Now, the core PCE print is the Fed's preferred measure of inflation. Now, this is the personal consumption expenditure and it measures the spending on goods and services by US citizens. Around 2012, this became the Fed's preferred measure of inflation. And it's got two figures here. You've got the headline and you've got the core. Now, this core figure is seen as the better indicator of inflation because it takes out food and energy. Now, food and energy markets can result in significant volatility. So by excluding them, the Fed considers they've got a better indication of where inflation actually is. And the main sections of the PCE report contain things like durable goods, which is things like motor vehicles, recreational goods, durable goods, furnishings, non-durable goods like food, drink, clothing, footwear, etc., etc. Services, healthcare, financial services, insurance, plus a range of other services. And that goes into making that PCE print. Now, what we can see is, let's just have a look here. Now, at the moment, there's a couple of things we have to factor in. So markets are thinking that the Fed meeting next week are 90% plus chance of hiking by 25 basis points. Now, the reason the Federal Reserve are hiking is to bring inflation back under control. And if you look at inflation on the headline, yes, that's been ticking lower. That's been reassuring for the headline inflation. And look at the core print, it's sort of staying a bit stickier. So this preferred measure of inflation, the PCE print, is going to be important. And if you just take a look here, you can see that please excuse me, I've got a little cold at the moment. At the moment, the print is around that 4.6% for February. And the annual change came in at 5%, but again, stepping lower. So when it comes to the meeting, you can see that the year-on-year headline is expected to fall from that 5% to 4.5%, and the core is expected to fall from 4.6 to 4.5. Now, the way this works is the lower this number is, the less chance the Federal Reserve, the less likely the Fed will need to hike interest rates more aggressively, and they're more likely to be on hold. So a low reading will mean lower interest rate projections for the Federal Reserve. So that would be dollar weakness, and that should cause 10-year bond yields to fall. So a low reading, you'll get dollar weakness, yields falling, that's upside for gold. High reading, you'll get high dollar moves and yields pushing up, which is a negative for gold. So if I show you why gold's so sensitive, if you look at this green, blue and orange line, orange is gold, green is dollar, and the blue is the real yield. Now, a real yield is a nominal bond yield minus inflation. So notice when you see the dollar falling and real yields falling, notice that that's a lovely uptick for gold, right? So when you've got falling dollar, falling real yields like we had in 2020, as they fall, that lifts gold. And when you start to see real yields rising and the dollar rising, look what that brings gold lower. Now, recently, the uptick we've seen in gold has been because we've had the dollar falling and the real yields falling. So what I'm looking for on Friday is if I see reasons for the dollar fall and reasons for real yields to fall, and I will see that if I get a miss in this data. So I want to see the core coming in below 4.5. So I want to see 4.4 for the core. I want to see 0.1 for the month on month. And then I want to see 4.5 or lower for the headline and 0.3 or lower. If I get that, then I'll be looking at going long gold from an intraday perspective. Now, looking at this is interesting. We've got this symmetrical triangle pattern that tried to fall lower. And the reason it tried to fall lower today was, if you notice, on this GDP headline. See, that's sudden selling in gold. The reason that was, if we just look at today's data, you see we had a string of very positive prints. The core PCE prices higher, above market's maximum expectations and pushing up. In other words, the Fed will have to be more aggressive. Dollar strength, yields higher. GDP sales strong. Consumer spending strong. Continuing and initial jobless claims all strong, showing that the Fed can keep hiking interest rates in that the US economy is strong enough to take it. So all of that was supportive of the dollar and supportive of yields. So you can see the 10-year yields moving higher. And you can see, let's just go to the dollar chart, and we saw the dollar pushing higher, right? So that's why we saw gold pushing lower. It wasn't something I traded today, although I could have done. I just had to be out away from the office today in the afternoon. So what that means is for tomorrow, all we need to look for a good opportunity is if this comes in lower than expected, you'd expect gold to gain. If it's much higher than expected, you'd expect gold to fall. Now, the best opportunity is going to come from a miss. 4.4 for the core, 0.1. See, the reason I'm saying 4.4 is below the minimum expectation. So in other words, that's a surprise. 0.1 or lower, 0.0% ideally, right? That will be a surprise. And that is what would lift gold. And technically, let's just have a little rundown on it. You can see we've got the symmetrical triangle pattern at false break, and then that could potentially open up a flush up to 2020, 2040 to the upside. So in an ideal world, I'd get a miss, and then I'd look as a target to that R3 pivot around that 2030. I'll check the pivot points for the day, but basically I'll be looking for a run up into that high area. And you can see we've got the symmetrical triangle with a potential false break. Now I have to see how that closes. If it closes below the symmetrical triangle, it won't matter because technically you still use it as a reference point. But if it closed back within the body of those candles, that's more powerful for a potential move to the upside. And like what you could do, because expectations are that there's going to be a weaker print, some traders will be buying this in advance, right? So they'll be buying this now in anticipation that expectations are that the PCE data is falling. So that's dollar weakness, yields lower. So they're buying it now. So that's why this flush low has been bought. Okay, and I wouldn't be surprised to see that, carry on up to these to this level later. So if you're looking for a low risk, high reward area, it will be buying at market with stops underneath 1972. Okay, folks, that's how you get ready for a risk event like that. I hope that's been helpful. And if you don't trade this, don't start trading it with a print like this. It takes quite a lot of skill and practice to do this. But if you are already trading gold and you've understood the analysis that I've given, then you can see that as a potential short-term upside in gold. If you're not used to trading gold spot, you could always use the leverage fund if you have access to one of those, and you could expect like 1 day of upside in gold. You know what I mean? So you could trade gold long until the end of the day. That would be one way of getting around that. Otherwise, just have a look at it, see what happens. Hopefully, I'll be, you can understand that the trade will only be on if you get an out of consensus print. We want a surprise to give the moves, but we know how the market's going to react most likely if we get that out of consensus print to the downside. Okay, folks, I'll leave it there. What we spoke about in this video is a risk event analysis surrounding the upcoming risk event outlined in this video. We want to put seasonals, fundamentals, and technicals all together for a great trade. We have the latest high probability swing trade ready for you right now to grab. If you just click below this video, we'll send it to you straight away.